Bitcoin falls towards 40,000, racks up longest losing streak since 2018. Bitcoin fell for a seventh straight day, the longest losing streak since 2018, slipping toward the cave official their hold of $40,000. As of press time, Bitcoin was changing hands around $40,800, down 2% over the past 24 hours. Based on CoinDesk pricing, Bitcoin's stretch of losses is now the longest since the downdraft from July 30, though a ghost 4 in 2018. The price hasn't fallen below $40,000 since September 2021, and it's well off the all-time high near $69,000 reached in November. Launched in 2009, Bitcoin celebrated its 13-year birthday last week, but there hasn't been much of a party. Crypto market analysts had warned recently that Bitcoin might be prone to a steeper sell-off, though there were some signs late last week that the market might be stabilizing. January tends to be a seasonally weak month for Bitcoin, but this year has been especially harsh, with the largest cryptocurrency down 11% so far in 2022. The market was rolled last week by the release of Federal Reserve minutes, signaling that officials at the U.S. Central Bank were starting to discuss whether to take more aggressive steps to tackle an inflation rate now at its highest in almost 4 decades. Many investors say Bitcoin has benefited in recent years from the Fed's ultra-loose emergency monetary policy since the coronavirus hit the economy, including printing more than $4 trillion to bolster ailing traditional markets. So a reversal of those policies is seen as a fresh headwind for Bitcoin. There are also a narrative in the market that Bitcoin trades like a risky asset, similar to tech stocks, and the Fed's hawkish tone could curb appetite for high-risk, high-reward investment. Macroeconomic uncertainty has led to relatively low conviction from market players. Analysts at Coinbase, institutional and arm of the biggest US cryptocurrency exchange, wrote Friday in a weekly update. The question now is when and where the Bitcoin price will find a floor. As of Friday, the price was down 35% from the all-time high. Previous drawdowns have reached levels of nearly 80%, and it took the market months to recover. Some bulls are still betting that the market is on the cusp of a fresh bull run, but analysts for the investment research firm Fundstrat say that market looks to have little near-term price support until it drops down to $39,500, roughly where the price bottomed in September 2021. Minute. So Bitcoin avoids mirroring 2018's 7-day losing streak and sub $40,000. Back in late July 2018, Bitcoin saw red for 7 consecutive days. The 7-day sell-off continued though to the 1st August 2018 before a 1-day modest gain briefly paused the correction. Bitcoin has not seen a 7-day losing streak since. The 7-day pullback in 2018 saw Bitcoin's slide 17% peaked, though further losses that followed eventually saw Bitcoin flatten out at $3,200 levels in December 2018 before finding support. That correction start to finish saw Bitcoin tumble by 61% before the breakout. It was some breakout which culminated in Bitcoin hitting $65,000 levels in April 2021. After having carved up 61%, the extended rally delivered a 1.9% return, though the peak. It's worth noting that Bitcoin fell for 6 consecutive months before the start of the breakout. Bitcoin is currently facing the prospects of a 3-month losing streak, on one that could be compared to the April through June 2021 pullback. Bitcoin 2022. Since the 2018 reversal, largely driven by a market pickup in regulatory chatter and activity, the crypto market has evolved. We have seen greater adoption, and more importantly, there is an acceptance that cryptocurrencies are here to stay. Talks of bubbles and comparisons to Dutch tulips have become infrequent. There does appear to be one of common theme between the pullback of 2018 and the current correction. However, at the turn of the year, we have seen a market pickup in regulatory chatter and activity. Unlike 2018, however, the market is also contending with COVID-19, inflation, and a hawkish Fed that is looking to curb inflationary pressures that it had once considered transitory. The days of free money may be coming to an end, but by historical standards, it will take a considerable amount of time for the Fed to return cash rates to normal levels. At present, the federal funds rate sits at just 0.8%, looking at the firm's economic projections. From the December 2021 meeting, the median forecast for the Fed funds rate is 1% for 2022 and 1.5% for 2023. The bigger question is therefore whether it is the prospects of a 1% Fed funds rate that is hurting the market or chatter from regulators. The economic projections have the longer run rate at 2.5%. Okay guys, it's all for today. Today we're talking about Bitcoins, about its ups and downs. See you in my next videos. Bye.